Hey guys, and welcome back to Inside Investing, where we empower beginners to take control of their financial future. In today's video, we're diving into the power of dollar cost averaging and how it can help you build wealth. So let's go. Okay guys, first let's talk about what dollar cost averaging is all about. Well, dollar cost averaging is a strategy where you invest a fixed amount of money at regular intervals regardless of the market conditions. It's actually quite a powerful tool to help you smooth out the highs and lows of the market and potentially lead to favorable investment outcomes. The beauty of dollar cost averaging really lies in its simplicity and long-term focus. So instead of trying to time the market, which even seasoned professionals find challenging, dollar cost averaging allows you to invest consistently over time. Let's explore some of the benefits of applying this strategy. As you know, we've been investing in our ETF-focused investing account as well, so please smash that like button and subscribe to make sure that you don't miss out on any free investing tip. First and foremost, dollar cost averaging helps reduce the impact of market volatility. You're actually investing a fixed amount of money at regular intervals instead of trying to time the market and really say, well, today's the prices are low, so let's buy it today, and then you try it again tomorrow and then the prices are high, so you don't buy anything. So this approach really takes out the guesswork of trying to time the market and helps out smoothen the overall purchase price of your investments. Additionally, dollar cost averaging removes the emotional aspect of investing. It really eliminates the temptation to make impulsive decisions based on short-term market movements or news headlines. Instead, you focus on the long-term perspective and stay committed to your investment plan that we've talked about in previous videos as well, regardless of those market fluctuations. But to better understand the power of dollar cost averaging, let's take a look at a couple of examples. Meet Sarah and John, both starting their investment journey with $10,000. Sarah decides to invest the entire amount up front. John actually chooses to employ dollar cost averaging by investing $1,000 each month for 10 months. After 10 months, Sarah and John have invested the same total amount of $10,000. However, due to the fluctuations in the market, their investment values differ. Sarah's investment experienced some highs and lows, and after 10 months, her portfolio was worth around $11,500. On the other hand, John's consistent approach, through dollar cost averaging, resulted in a portfolio worth $12,000. Even though the market had its ups and downs during this period, John's consistent investment allowed him to benefit from the power of the low prices and accumulate more shares. Over time, these additional shares can significantly impact the growth of his portfolio. So guys, now that you understand the power of dollar cost averaging, let's go through a step-by-step guide to help you implement this strategy. Step 1. Select an investment vehicle that aligns with your financial goals and risk tolerance. This could be a low-cost index fund, an ETF such as VWRL or the S&P 500, or any other investment option that provides a broad market exposure. Step 2. Set a regular investment schedule. Determine how often you want to invest, whether it's monthly, quarterly, or any other interval that works for you. Step 3 is automate your investments. Take advantage of automatic investment option provided by your brokerage account or set up an automatic transfer from your bank account. This ensures consistency and helps you stay disciplined with your own investment plan. DEGIRO, as of now, sadly does not offer such an automated option, but plenty of other brokers do. And step 4 is stick to your plan, guys. Avoid the temptation to make changes based on short-term market movements. And remember, dollar cost averaging is a long-term strategy, and consistency is key for sure in this part. While dollar cost averaging is a powerful strategy, it's important to adopt a long-term mindset. Investing is not a get-rich-quick scheme, so it requires patience, discipline, and a focus on your financial goals. And to maximize the effectiveness of dollar cost averaging, it's essential to stay committed and avoid common pitfalls. Don't let the short-term market fluctuations derail your long-term investment plan. Stay invested through markets ups and downs as well, as historically markets have shown a tendency to rise over the long term. Additionally, it's crucial to periodically review and adjust your investment strategy as needed. As your financial situation and goals might change, you may need to rebalance your portfolio or make small adjustments to your investment allocations. Now, let's address some common misconceptions about the dollar cost averaging. Some people worry, for example, about the impact of fees on their investments. And we must say, while fees are a valid consideration, there are low-cost investment options available, such as index funds and ETFs, that can really help you minimize those fees and maximize your return. VWRL or the S&P 500 are two great examples of that. Another concern is whether dollar cost averaging is suitable for different investment goals. The beauty of this strategy is its versatility. Whether you're saving, let's say, for retirement or down payment on a house or any other financial goal, dollar cost averaging can be adopted to align with your specific needs and time horizon. So guys, just before we wrap up, here are a few additional tips to optimize your dollar cost averaging approach. First, consider diversifying your investments across different asset classes, such as stocks, bonds, and real estate, like we've talked about before, to reduce your risk and enhance your potential returns. Second, take advantage of tax-efficient accounts, such as individual retirement accounts, IRAs, or workplace retirement plans. This will of course depend on the country that you live in, and these accounts offer tax advantages that can further boost your growth, your own investments over time. Lastly, continue to educate yourself. Keep up with financial news, read books on investing, and stay informed on the overall economic trends. The more knowledge you acquire, the better equipped you'll be to make informed investment decisions. Alright guys, I think it's time for you to take some action. Start implementing dollar cost averaging and witness the power of consistent investing over the long term. And remember guys, building wealth is a journey and dollar cost averaging can be your trusted companion along the way. So guys, that's a wrap on today's video. If you found this information valuable, then please be sure to smash that like button and subscribe to our channel for more free investing tips and strategies. If you have any questions on dollar cost averaging or anything else, then please leave them down below in the comment section. We love to hear anything from you. Also, if you've got some new tips on the next video, please leave them down in the comment section. Thanks for watching the video and we'll see you next time guys. Let's go.